Does it feel like your dollar is purchasing less and less by the day? Is the economic data even making sense? And is the steady erosion of your purchasing power putting your retirement at risk? More importantly, what can we do about it? How can investments in safe haven assets like gold and silver stop the bleeding? Gold is clearly on the rise and making historic highs, but how does silver play a part in all this? Seasoned investors understand that when gold leads, silver inevitably follows. With prices still elevated, high interest rates, and the mounting national debt, the present and future purchasing power and cost of living of everyday Americans is more and more uncertain. If you think that you may be falling short of your retirement goals, see the link in the video description to the free inflation and retirement calculator. To explore the subject of gold and silver, its past, present, and future role as money, a store of value, and a hedge against the weakening dollar, we will hear from economist and investor Keith Weiner, author and economist at George Mason University, Lawrence H. White, and economist, White House advisor, and author Jim Rickards.
Gold, I always recommend a 10% slice. And, I talk about gold a lot because it's a form of money, and I do the monetary analysis. And then people always say, Jim, what about silver? What about silver? Like, if gold soars the way I expect, silver's along for the ride. There's not going to be a world of $3,000 gold and $20 silver. That world doesn't exist. If gold's at $3,000, silver's going to be pushing 100. So without giving an exact forecast, silver will be along for the ride. And I do think it's extremely practical because in a world of CBDCs, silver will be a form of spending money.
Gold was the best money for conveying value over great distances. So there could never really be a price differential between gold in New York, gold in Zurich, gold in Shanghai, because it's only one plane trip. And because the value density is so high, it doesn't really cost very much to put it on a plane. It's less than 24 hours and not very expensive to bring it anywhere else in the world. And so it has a uniform value. To get the same value in silver is something like 150 times the bulk. So what would fit in your pocket in gold would weigh 75 times as much. So that would probably be a bit more than you'd want to put in a backpack. So I think silver evolved as the best money to carry value over time for wage earners and small savers. So think of a skilled blue-collar trade putting 10% of his weekly wage into savings. Gold is just impractical. To get small amounts of gold like that is expensive, and you're either not getting something that's really tangible you can see, like a little 1 gram bar, and the premiums are very high, versus a 1 or 2 1-ounce silver coins. It's tangible, you can hold it in your hand easily. If you're doing small amounts, silver gives you a tighter bid-ask spread, more marketable in small amounts, and gold is the most marketable, but you have to have kind of a minimum quantity before gold's superior marketability will beat silver.
In a freely evolved banking system based on this historical record, the definitive money was gold or silver coin. The unit of account was so much gold, so the dollar had a definition as so many ounces of pure silver, or later so many ounces of gold. The common money, though, was not coins. People didn't carry big bags of coins everywhere. They paid with bank-issued money. Banknotes, as I already mentioned, and merchants especially with checking accounts, all denominated in the gold dollar and all accepted widely at par. There's no reason we can't have phone transfers of gold-denominated money any more than fiat-denominated money.
There's nothing unique about gold except for its history, but a silver standard would behave pretty much the same way. One of the nice things about a gold or silver standard is that it has this self-correcting tendency built into it that if there's an increase in the demand for money and it starts to raise the purchasing power of money, it'll stimulate more supply. Gold miners will dig a little deeper.
Gold is money. Dollars are money. Euros are money, Bitcoin is money. They're all forms of money. And if you want to know what gold is worth, just ask anyone who uses money. We all need money. So we have a subjective appraisal of what each kind of money is worth. And in a world where we have very high confidence in central bank money, we're confident in dollars and euros, gold might not be worth very much. But in a world where we start to lose confidence in central bank money, our subjective preference for gold as money would start to go up. Now, people look at the jewelry industry, but I consider jewelry to be wearable wealth. Okay, it's decorative and it's pretty. I understand all that. But if you talk to an Indian bride with, 3 pounds of gold draped around her neck in the form of gold necklaces, she'll tell you that's her wealth. That's her bank account. That's her IRA. That's going to put her kids through college or pay for her house. And so that's how they think about it. And that is the right way to think about it. So
how do you hedge against an ever-depreciating fiat dollar? Own the opposite. Sound money. Sound money is built with assets that have scarcity, a long track record of trust and value, and cannot be printed by central banks. policymakers, institutions, and governments may decide the fate of our currency, it is our responsibility to safeguard the wealth we have because no one else is going to do it for us. If you are interested in protecting your retirement savings and preserving your purchasing power through a tax-deferred Gold IRA, see the links in the video description. To attend a free Gold Education webinar held by Augusta Precious Metals, see the link in the video description. Thank you for watching.